Good morning, and welcome to episode 157 of Getting Rich. I'm your host, Rich Checkan, president of Asset Strategies International, and today is Wednesday, January 17th, 2024. Well, the Iowa caucuses are behind us, and it certainly appears that we're headed for a rematch of 4 years ago in the presidential election here in the United States, with President Biden and former President Trump both leading their respective parties in the ballots. Next stop, New Hampshire. Meanwhile, back on Capitol Hill, it looks like we're inching ever closer to a potential government shutdown for failure to pass a continuing spending resolution by Friday midnight, the 19th. I'll give you a bit of a spoiler alert of what I think will happen. We're going to wait till the 11th hour. We're going to go ahead and we're going to pass a continuing resolution, and we're going to continue to spend more money that we take in. That is the script. We've seen it play out before. I don't see why the script's going to change in this case. Meanwhile, in the Red Sea, Houthi rebels continue to harass shipping lanes, attacking container ships in the area. The U.S. and the U.K. over the past week have launched retaliatory strikes on Yemen. The Federal Reserve governors have been out speaking, and they're basically putting a damper on the investors' party. Investors thought that, basis the comments in December, that we would see interest rate decreases as early as March. That does not look like it's going to be the case. All the governors are out basically saying that, yes, we expect to decrease rates in 2024, but we're in no hurry to do so. The market is not dictating that we need to. As long as inflation remains elevated and intact, there's no sense to rush to decreasing interest rates. And as a result, the markets, to include precious metals, have been pulling back a bit as we start 2024. Let's take a look at the numbers over the past week. Gold is down 0.4% to $2,025 an ounce. It was $2,033.80 an ounce last week. Silver's down 0.8% to $22.83 an ounce. It was $23.02 last week. Platinum's down 4.2% to just below $900 at $899 an ounce. It was $938 an ounce last week. Palladium is down 5.9% to $956 an ounce. It was $1,016 an ounce last week. With gold holding up a little bit better than silver, the gold-silver ratio, or number of ounces of silver it takes to buy an ounce of gold, has increased again this week to 89.05. It was 88.68 last week. And the U.S. dollar is strengthening its muscles, and U.S. Treasury yields are up as well, but the dollar index is up to 103.34. It was 102.46 last week. So in the meantime, the dollar appears to be strengthening. Metals appear to be pulling back. It looks like we have a prolonged buying opportunity. But in the end, when the Fed will decrease rates, and it is coming, make no mistake about it, that will bolster the argument for owning precious metals. You have an extended opportunity to buy them well, and it's just delaying the inevitable higher prices for gold and silver going forward. You know what to do. As always, we'd like you to go ahead and subscribe to our YouTube channel, like us, send us your comments and questions, follow us on social media, take our twice weekly Always Something Interesting alerts and our once monthly information line newsletter to stay informed. But in the end, don't ever forget that getting rich starts with keeping what's yours.